the VIX, we have this compression pattern on the VIX in the form of a bullish falling wedge where when I say compression pattern, we're just, it's a tightening compression of price that will eventually explode to the upside. And right now we've seen these smaller pushes to the upside that have given us the volatility in the summer, July and August. We've had this run up in September and we just hit a new high. The VIX is not moving to a new low, so there's a discrepancy between the VIX and the S&P 500 with these divergences that have formed. If we can see a breakout here, which we're trying to do right now, if I take a trend line from the peak over here to this peak right here, excluding the shadow again, we tried to do it yesterday, but we're pushing right back below the trend line. So again, if we can get a good breakout here, jumping above the 50-period moving average. Let me bring it in close. My trend lines move on me a little bit when I do that, so it's not going to be perfect. But we got above the 50 yesterday. We came back and we closed back below it today, hitting the moving averages of 10 and 20 as they crisscross back and forth. We tried to get a bullish cross. Now we're trying to get this bearish cross. We have the 10 now back below the 20-period moving average, but resting on those moving averages. If we can bounce off of them and get above the 50-period here, then volatility will increase. When you're above the 50 period, the green line on the VIX, bad things happen on the S&P 500. So we got above it. Now we're pulling back to it. We're closed just under the 50 period here on the VIX. We had a 4% rally yesterday. Gave it back today. These bullish divergences, again, the stochastics turn back up here off of extremes. The MACD here needs a big push above the center line to see the volatility return, and the RSI has gotten back above 50. This bullish diversions. Bring it up close, you can see the RSI popped above 50. It's coming back to the 50 area and resting there with coming back to the 50 day moving average. The MACD has turned back up, but we're still under the center line. If we can get back above that center line on the MACD, you'll see volatility return. You get back into positive territory at the MACD, you get above that 50-period moving average and stay above it, then volatility will return on the S&P 500. Be watching the 50-period moving average. That's a simple moving average on the S&P 500. On the VIX here, and above it, we've had these sell-offs during the summer. If you get above it and stay above it, we'll get a bigger sell-off. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site and you can donate any amount you want. I thank you for your consideration for that. Okay, we got 0.25% out of the Fed. 2 more possible cuts coming later this year. More about all that in a moment. The Dow was up 260 points, up 0.57%. The S&P was down about 6.5 points, down about 0.1%. The NASDAQ was down 0.33%. The Russell was up 0.18%. Interesting candlestick today on the Russell. I'll show it to you. And the VIX. The VIX was down after rising 4% yesterday, down a 3.98%. Above the 50-period moving average yesterday, pulling back to it today. I'll show you the chart. Bullish things happening on the VIX right now. Now, while the Fed is penciling in, we got the Fed projections and estimate for the Fed funds rate for this year, next year, and economic growth and all the rest of it, which again, they're not predicting a recession. They're still expecting growth this year, next year. They never see the recessions coming. Never. But what's interesting is the market was expecting more cuts in 2026, about 3. The Fed saying 1. 1 cut in 2026. And possibly 2 more in 2025, in totality 3. Remember, the Fed had started cutting just before the election and then stopped in 2025. Now the Fed resuming, Powell citing the weaker labor market and talking about the balance of risks shifting, going from inflation to the weakness in the labor market and the first half of the year, the weakness with the GDP. But there's one clear thing from this meeting, and that is Powell saying the same thing that he previously said. There's really no rush to cut, no sense of urgency. Now, eventually, we will see more weakness in the labor market. We'll probably get some more positive reports that will really disguise what's going on in all likelihood. But again, you're probably going to see a big negative number coming down the pike. But we'll probably see the jobs reports begin to improve. In a few months, the markets will sell off, bottom out, rally back up. And you're going to get a negative jobs report in the future. This is what happened in 2007. Negative numbers, they went back to positive for a few months. Market rallied up to new highs, and it topped out. And it topped out with a negative jobs report. I think you're going to see something very similar to that here. But right now, the Fed is only forecasting one cut in 2026. Two takeaways from this is there's no sense of urgency to cut. While taking that same tone, no rush to cut. He's taken that tone before. Data dependent and all the rest of it, although they've penciled in these cuts, still talking about being data dependent. And if we see the inflation data continue to rise and the jobs reports start improving, there could be people calling into question whether the Fed is going to continue to cut. I've said it might be a one and done right now, even though they penciled in other cuts. We just might get another quarter, and the Fed just really no sense of urgency. Again, I was taking the same tone that he took 2024 and then again earlier this year in 2025. No rush to cut. He's taking that same tone. Now, previously, he was scared to death of Trump's tariffs and was all but certain that they were going to cause inflation, which, again, that didn't happen. But if inflation starts ticking back up, as I believe that it will, the money supply is increasing, then could the Fed move back to sitting on the sidelines again? I think that's very, very possible. They're penciling in a couple more cuts. And again, if we start seeing jobs reports, if we start seeing inflation go higher, those cuts could go by the wayside for 2025. Those two more cuts at the next two meetings, quarter point each. And they've only got one cut penciled in for 2026. Again, eventually we're going to get these jumbo cuts. We're going to get the recession the Fed is telling us we're not going to have. They're always oblivious to this stuff. They never see it. You know, if you believed Keynesian economics, you wouldn't see it either. But here's what he was saying back in February at the beginning of the year. He also said this in 2024. No rush to cut. Here he was saying it again, going into the summer, beginning of the year, and then saying it again, no rush to cut rates. Now he's taking that same tone. Didn't say that, but he's taking that same tone in the press conference. No sense of urgency. The Fed is still doing quantitative tightening. Their projections is that, well, by 2028, in the next couple of years, we're going to have inflation down by 2%. And the reporter said, hey, this is what you said 2 years ago. And that's when Powell's talking about, the upside risk with inflation, the downside risk with employment. And Powell said we have a situation where we have a two-sided risk, which is the risk of stagflation. And why I'm saying that is because, again, we're going to get, before the next Fed meeting, by the October 29th meeting, we'll have another inflation report. By the December 10th meeting, we'll have 3 more reports in totality. We'll get a CPI report on October 15th. October 15th, ahead of the meeting there at the end of October, on October 29th. Ahead of the December 10th meeting, we'll get 2 more inflation reports for the CPI. We'll get one in November on November 13th, and then we'll get one the day of the Fed meeting, ahead of the Fed announcement, that very same day on December 10th. Watch what happens if we rally into December after this sell-off. You're going to have three more reports, October, November, December, in the fourth quarter here, and we'll have 3 more jobs reports, one ahead of the October meeting. Have 3 of them will have been done ahead of the December 10th meeting, along with these inflation reports. So again, we're going to be watching that data very, very closely. The expectations for three cuts ahead of the Fed meeting, again, they were in the 60% range there. And again, we got the one today for the September meeting. It's expected we're going to get three cuts. The Fed has now penciled in three cuts. There's plenty of time and plenty of economic data for these hopes to be dashed. Penciling in one cut for 2026. That's it. Those odds a little bit higher after for the cut in October and October 29th and December 10th. A 7.7 chance of a quarter point cut in October and a December cut, 79.9% chance. So again, Fed Fund Futures still hoping that we'll get those cuts. Have economic data coming. We're going to have three more jobs reports coming here in the fourth quarter, and we're going to have three more inflation reports ahead of the Fed meeting. One on December 10th, we'll get it the day of the Fed meeting with the CPI. If the jobs reports start improving, it could dash hopes of these other cuts in 2025. And also, we start seeing the inflation data tick back up. And Powell addressed this in the press conference, the risk of higher inflation and a weakening labor market, really the risk of stagnation. Several hours before the Fed announcement, I posted on social media at Charting Prodigy on X, formerly Twitter. I talked about a pop and a drop. Got that. We popped higher and then we ended up selling off. We ended with this doji. Now, again, talked about a sell the news event. Sometimes with the Fed, get a rally with the announcement and a sell-off with the press conference or vice versa. But oftentimes when you're going to get a sell-off surrounding a Fed meeting, announcement, sometimes there's what I call a post-Fed sell-off. Sometimes that happens, and this is what I posted on social media before the announcement. Oftentimes you'll get an announcement, end up creating a sell-off, but it won't be directly Fed day. Today we did have some volatility. We did get a doji, but you didn't get a dramatic sell-off. Sell-off that we had, that we did get, we recovered from. That's the point. But with a post-Fed sell-off, oftentimes there's a delayed reaction. You get it Thursday or Friday. And we've got options expiration this week, so you could very easily have this volatility. We've had a rally earlier in the week, then we get these swings back up and down with the Fed on the Fed day here. The rally Monday and Tuesday going into new highs. Could we, by the end of the week, be reversing, starting a trend change very well? Could be if we get the post-Fed sell-off. And again, a post-Fed sell-off would be sell-off that would begin Thursday or Friday of the week of the Fed meeting. Sometimes it's delayed until after following week, and that could happen right after options expiration that ends this week. We got a 9 count on the S&P 500. Oftentimes the 9 count is associated with the top. Sometimes you go a little bit higher, like over here, and then you end up getting a sell-off. Other times the 8 bar is the high of the count. That's what we now have on the NASDAQ. But you did get a 9 count, and if we do turn immediately, we could begin a bigger pullback. You did get the 9 count yesterday on the S&P 500. You got the 9 count today on the NASDAQ. Yesterday I talked about how each one of these counts, these 9 counts and 13 counts, have been associated with pullbacks, either sideways or a pullback. Each one of them has. This one will likely give us a larger sell-off than what we've seen so far. I still think we're going to new highs. Each 9 count was associated with some type of corrective move. This one will likely be as well. With our divergence that has formed on the daily chart with the RSI, we had one at each one of these peaks, at the July peak here, at the mid-August peak over here, the late August peak over here. We had a triple divergence. This is now a quadruple divergence, and you get another one here. We had one late July, mid-August. Now we get another one here in mid-September. The 9 count on the S&P, and now we get it today on the NASDAQ. We also got it on the semiconductors, which I think is important. 9 count today, possible hanging man candlestick. The 8 bar is the high of the count, though. Possible hanging man that followed here. Being an Nvidia sell-off. We were told there's no way this is going to happen, and yet China has put this ban on Nvidia chips, which could end up creating more tensions between China and the U.S., by the way. I told you back in early August, Nvidia peaked. Nvidia slammed into major resistance, and it peaked in early August. It went back up and got a lower high with earnings. I told you we would likely see a sell-off surrounding earnings. We did. It ended up dropping 11.25%. It rebounded back up, got a lower high to fill the gaps. I talked about that down at the bottom. We got some bottoming tails, inverted hammer and a bottoming tail there, and I talked about filling the gaps. We did that. Now we're dropping back below the 50-period moving average here. Nvidia, if I bring it up closer, Nvidia peaked in August. We had the divergence play out. It gave us a sell-off. We went back and we got a little miniature double top pattern, got a lower high, slightly lower high. We sold off 11.25%, and I talked about the bottoming tail, the inverted hammer, and again talked about these gaps getting filled and moving back to the moving averages for a test. As we get a bearish realignment of the moving averages, the 10 and 20 are now in a bearish alignment. You've got the 20 now dropping here below the 50 period. So again, the rally back up, gapped higher. We filled these gaps back over here, and now we're dropping back below the 50 period moving average as we get a bearish realignment of the moving averages. So again, as we go down surrounding earnings, we got that long leg doji that was confirmed. We have a confirmed reversal on Nvidia, and I told you eventually the markets would follow suit. Nvidia did not make a new high. NASDAQ did. They diverged from one another. That's usually a bad sign for both of them, for the NASDAQ and for Nvidia. Daily chart up close right here of Nvidia. I wanted to show you that bearish realignment of the moving averages. The RSI is confirming another lower high right here and now moving into the negative region. Nvidia down 2.62% today. Again, a drag on the NASDAQ. You're told no way this could possibly happen, and yet it's happening. Nvidia peaked back in August. So I think it's going down towards the 200 period moving average here, towards the 140 to 150 area down over here. I don't know that we reached the 200, but I think we're moving towards it. We have the peak back over here that I'll be watching, just like the on the NASDAQ, the peak back over here. No guarantee that level holds, though. We could be moving closer towards the 200 period or the 100 period moving average now seen here. The Nvidia daily chart and the NASDAQ daily chart are both doing the same thing. Massive broadening formations. I think Nvidia sells off, and then I think we get a rebound back up into the end of the year, probably November, December. Maybe it drags out into January. I think if you see a rally into November or December, maybe we start seeing a negative number, a negative jobs number, a big one, in the coming months ahead. November, December, January or something. I think markets could peak. I think NASDAQ will do the same thing. But Nvidia being a drag on NASDAQ, semiconductors getting a 9 count today with the semiconductor ETF. NASDAQ getting a 9 count today. Well, we got that 9 count on the NASDAQ today. Possible hanging man. 9 count on the S&P yesterday. And here's the S&P one more time. The semiconductor ETF SMH, we got it on the semiconductors today. An interesting candle on the Russell 2000. We got a gravestone doji. We already had a 13 count. We've gone higher. We've got these rising wedges. Look at this. The Russell slammed right into this upper boundary trend line from these highs over here, slammed right into it today, moved to that new high, and then we turned down and we came right back and closed at this trend line down here with the rising wedge. NASDAQ and S&P broke their rising wedges and possibly back tested them during the session. We were all over the place on the chart today. Again, a pop and a drop. This is what I talked about on social media today. Still may see a post-Fed sell-off because we didn't close sharply lower. We had this drop, but it was a lot of volatility back and forth, and we got the recovery. Dropped back below the 200 period, went back above it, tested the highs, and then dropped back down to a new low here, and then again closed right near, just under that 200 period moving average here in the 5-minute time frame. The Russell is resting right on the rising wedge from that lower boundary. Here we broke down from the rising wedge on the S&P 500, went down, popped first, tried to back test, and then we went down and we found support around the 200 period here on the 15-minute chart. We stalled right here at the cloud and the 50 period here in the 15-minute time frame. We're stalling just under that 50 period here, just under the 200 in the 5-minute time frame. The divergences are giving us this sell-off so far. So again, we'll see what happens with that. Negative divergences here in the 15-minute time frame. That volatility, break of the rising wedge, and then the rebound back up to back test it, push back down, ended up giving us this candle of indecision right at the 10 period moving average. We've got this quadruple negative divergence on the S&P. If it's going to play out, we've got to take out the 10 and the 20. We've got to come down, take out the momentum cloud here, and you got to start dropping back down below the moving averages if we're going to see signals get a reversal. At the spinning top here, getting rejection off of the upper Bollinger Band with quadruple negative diversions. Yesterday's 9 count closing back below the upper boundary of the Bollinger Band. Stochastics now rolling over here. So again, we'll see if we now start to drop with the post-Fed sell-off. Triple negative diversions on the NASDAQ going down to that 10 period and then again rebounding. Possible hanging man, possible candle of indecision on the S&P 500. Both of them getting 9 counts. Massive divergences on their MACDs. NASDAQ 15-minute chart, same thing. We broke down from the rising wedge. We came back down to the 200. We bounced before it, came to the 200, and then we bounced again, closing right at the cloud, right near that, right at that 50-period moving average here. So going to be watching, do we start taking out these 200-period moving averages in the 15-minute time frame on NASDAQ, on S&P? These divergences so far giving us this sell-off. We did the same thing. We had a pop and a drop, but then we recovered, and we still ended down 0.21% on NASDAQ. We still lost 51 points, but we recovered off of the lows of the session, and that gave us a possible hanging man in the daily time frame. So again, these little divergences playing out. We'll see if we validate a lower high now, if we get rejection at these clouds. NASDAQ 15-minute chart. The larger divergences in the daily time frame, if I zoom out, here it is on the NASDAQ, very similar to what we had back over here ahead of the February sell-off. Again, I'm expecting a move down towards the cloud or maybe this level of support, this horizontal level of support here from the February high. Below that, our 200-period moving average. I'm going to be looking at the 100, 200-period moving averages. I'm going to be looking at this horizontal support and the cloud of support. But this is where I think we're likely headed, and then I think you get one more push higher after a correction, but we could go back towards these 200-period moving averages, which could be rising as we're dropping. So the seasonality, this September seasonality will still play out. We get back on track with the post-election cycle, as I talked about yesterday. Longer-term seasonality of nearly 100 years, suggesting an early September peak around September 6th. We're late on that. Watching, do we still get this negative September seasonality playing out? Likely, with the 9 counts and the negative divergences here with the Fed meeting, you're probably going to see the corrective move. And I still think that we're still going to go to new highs and likely go to this trend line right here. If we reverse right now, falling short of it, I think you will eventually reach it. Nvidia doing the same thing, the broadening formation I've been showing you with Nvidia, showed it to you in this video here. And then I think, again, in the coming months, November, December, maybe on into January, we see the market peak if it drags out. But I think you're going to get a parabolic rise. I think we have the final phase of the blow-off top starting back in April. And I think that we'll get this pullback and you'll get the final climax move right there. Going into the fourth quarter, you're going to get this reset, and then the fourth quarter is probably going to be really, really good. Going to get a buy the dip moment, and it's going to cause everybody to be very complacent. The kind of complacency we're seeing right now, very complacent. Once we get to the top, they're going to go, it's another buy the dip. In reality, you're likely going to see a drop bigger than what we saw over here. You're going to see a drop from up here coming all the way back down to the April low, in my opinion. I think the broadening formation will begin to play out. And remember, when NASDAQ peaked in 2000 with the bursting of the tech bubble, had dropped in about 2 months. It dropped 42%. You're going to see something similar. Right here, it was just like, what was that, a 25% drop? So I think you're going to see something much bigger. And again, I think the April lows are going to be tested once we push higher into the end of the year. Now, as I said, at the April bottom, I think that we're now entering the final phase of the blow-off top. We have wave 1 and 2 done here. I think we're wrapping up wave 3. It's been greatly extended, forming this multiple point negative diversions. My signals have remained bullish. They turned bearish in July and then reverted right back to bullish. A couple of them turned bearish in August, but then again reverted right back to bullish. My signals have been consistently bullish. In order for this divergence to play out, it has to be validated by my indicators. We have to see it turn, my signals turn bearish. My signals are still bullish. We got to take out the 10 and 20 period. You got to take out this trend line from the April low now to these lows right here. And you got to start dropping below the momentum cloud. You got to take out the 20 period moving average and come down to test the 50 and eventually lose that. I think you're headed towards the 100 here, the pink line, or the 200 towards the cloud, maybe this level. If we take it out, then maybe the 200 period moving average. I think you'll see a 4, and then I think you'll see a 5 going into November or December. Maybe it drags out into January. We'll see. I think the market will top and you'll crash back down to the April lows. It'll be a bigger crash than what we had over here. There's diversions going on with the NASDAQ as well, triple negative diversions. Again, turning down off that upper Bollinger Band. I think you're headed back to the 200, maybe to this horizontal support level with the lower end of the cloud, but I think you'll get a bigger sell-off than what we've seen so far. Thing with NASDAQ, again, Elliott wave speculation. If the count is to play out, if these divergences are to play out, my signals have to turn back to bearish. If they do, we've likely completed a wave 3 and get a wave 4 and then go on and get wave 5 into the fourth quarter, which I think will be a good quarter. It'll be a powerful quarter.